Okay, a bit of a bonus video for you guys this week. Bank of Canada moved rates up this morning, another 0.75%. That moves the variable rate from the prime rate, rather. Well, it hasn't officially moved yet, but it will at some point today for most lenders to from 4.7 to 5.45. Wildly expected, nothing out of off script here this morning. A couple things to note. First of all, they did not talk about any pause in interest rates, did kind of even threaten some more. I think that's to be expected. I think that they were never going to say, oh, we're going to let off the gas, because I think that produces things where they're not able to, make a move with people think that there's there's relief coming. I think it doesn't have the effect. I don't think that's a right way of thinking about it, but I think that's how they think about it. Two, this is going to be a very meaningful change when it comes to two things. First of all, since July, this is the first time that the overnight rate and prime rate change affects people's pre-approval. So if people are waiting on the sidelines, it's going to affect how much they borrow. Usually about 8% taken off how much they can borrow. So that matters. That's a big deal. Two, and the other thing to be massively aware of is that we're going to see some trigger points get hit now. And so trigger points are most of our clients do variables that the payment goes up as variable rate changes, which you felt that pain this year, as have I, for that matter. But the vast majority of big banks, other than Scotiabank and most credit unions, the payment doesn't change. Your variable and principal payment changes. Variable and interest ratio changes, and we talk about that all the time as that being an option to lower your payment, but that is that there is a party that stops on that for those banks, and that is when the rate gets too high, you have negative amortization. I saw someone's mortgage, not one that I did today, and they have take them 70 years to pay off their mortgage based on their amortization. So you're going to see those payments go up for the first time this year. So you're going to see a really meaningful amount of borrowers where their payments are going up for the first time, and they're going to react accordingly. This is a really important thing to pay attention to, because this is different over previous rate hikes. I think the last part of the puzzle here is that I think this idea that the rates are going up to curb inflation seems to make a nominal effect. Yes, house prices and activity have slowed, gas prices are down, so we can make the comment that the effect has already happened. I mean, the moment rate hikes changed, the market slowed down in March meaningfully. I don't think there's any question about that. And then I think that really matters. If I'm honest with you, that really matters. And then, so I don't think that it would be correct to say the Bank of Canada is moving towards a goal that's either realistic or possible. Like, they're not going to curb inflation by hiring rates. I don't care how many economists say that. I mean, we're going to do a lot more videos on the idea, what if it's true the Bank of Canada is just crazy, and they just are untethered from reality, and how do we handle these types of things. So really watch that. If you want to go through your variable rate mortgage, no matter how many times you've done it, please do reach out. Below there's a chance to below there is an opportunity to schedule a 10-minute appointment. Let's do that. Let's make sure you're feeling good and all that type of thing, and let's go from there. Thanks so much. Please do share this video, subscribe to it if you haven't subscribed to our channel. Got lots of other great content coming up that we think will be helpful for you. Talk to you soon.